As for the US dollar, here, of course, the Federal Reserve is the main driver of the market sentiment and the dynamics of this currency. Here on the right, we have a histogram showing how the market is pricing in the possibility of the Federal Reserve's rate hike at December 14th meeting. This meeting is not the nearest meeting of the Federal Reserve. We will have a meeting on November 2nd. However, as the US presidential election is scheduled on November 8th, no one really expects that the Federal Reserve will tighten policy ahead of the elections. If we make this a bit sideways step and talk a bit about US politics and how the situation develops in America, we can say that Hillary Clinton is now rather confidently ahead of the Republican candidate Donald Trump. This is considered to be good for the market because the future actions of Hillary Clinton, her policy approach, seems to be more comprehensible for the markets, and it represents the less risky continuation of the current policy of the US presidential administration. So the current lead of Hillary Clinton is a positive factor for the US stocks, and it puts some pressure on the greenback. US dollar would show more gains if Donald Trump was ahead and if his chances to win the election were greater. We know that Donald Trump is against America's trade agreements with Canada and Mexico. Mexico is especially unfavored by Trump. So in case of his victory, we would see stronger US dollar and weaker emerging market currencies. However, the recent second round of US presidential debate, which took place on Sunday night, once again showed that Trump is weaker and less persuasive than Hillary Clinton. So we saw that US dollar declined a bit versus Mexican peso, which is believed to be a better indicator of how the market is evaluating the chances of Donald Trump to become US president. So for now, the risk of Trump, let's call it this way, has diminished. And the situation is more stable for American stocks, but less favorable for the US dollar. Somehow this a bit decreases the demand for the US dollar. The fact that Hillary Clinton is ahead, and some analysts and experts even say that the results of the election are already clear, so that Hillary will win. However, I think that the Federal Reserve will still think that until we know for sure the results of election, until November 8th comes, risks exist. We remember that Brexit vote to leave the European Union was still very surprising for everyone, and always the risk of surprising outcome of the US election will exist. So that is why the Federal Reserve, in my opinion, won't raise rates at November 2nd meeting. So the main focus is on December 14th. And here we can see at the chart that the possibility of the US rate hike has sizably increased. A week ago, it accounted for about 50%. Now we are talking about 60%. This data is accumulated from the futures on the federal funds rate. So that is how the market is evaluating the possibility of the rate hike. We see that 60% is not 90%, and here is potential for these expectations to increase. It will happen if we'll see more positive data coming from the United States. This possibility will keep rising, and this will be a bullish factor for the US dollar. On the other hand, we saw that on Friday, US labor market data came out a bit weaker than expected. Here on the left, I have the chart of US non-farm payrolls. And in September, the indicator rose by 156,000. It means that American economy created 156,000 of new jobs. While the forecast was higher, it was 171,000. The market was a bit disappointed, especially taking into account the fact that the US unemployment rate increased to 5%, while the consensus was that it would stay at 4.9% level. Average earnings indicator rose in line with expectations by 0.2%. This is a good moment in the overall weaker US data. Despite some initial reaction of the market, some selling of American currency, which gave opportunity for traders to take some profits on the US dollar and to organize a kind of consolidation in several currency pairs, in British pound US dollar pair, for example, and in gold price, which also made a big move versus the US dollar. Despite this fact, I believe that the data from the US labor market are generally in line with the prospect of December rate hike. We can recall the fact that the Federal Reserve Chairman, Janet Yellen, said in August that American economy needs to create just under 100,000 jobs a month to be healthy and to be in a good and stable state. And we see that it is not under 100,000, it is more, it is 156,000, which calls for the Federal Reserve's rate hike. I have read some opinions from the leading economists who say that actually it is time for the Federal Reserve to raise rates because the low rate policy of the US Central Bank has inflated American stock market, and now we have unreasonable readings in US stocks. The capital market is no longer fulfilling its function of being a place where market participants can allocate capital in the most efficient way. Because of this artificial stimulus from the Federal Reserve, there are problems with financial markets. So in my opinion, the December rate hike is a very realistic scenario, and the Federal Reserve is moving in that direction. So all in all, despite some short-term negative reactions in the US dollar, I remain bullish on this currency and think that it is currently undervalued and will gain more the closer we are to December. In the near term, we probably will see different dynamics of American currency versus different other currencies, and we'll discuss this in greater details when we will be looking at the price chart.